What's their largest market? What country?
One of the biggest markets is Australia, given the mining industry. But it's difficult to really come up with one specific country, given the fact that they operate in all of these countries in 4 different business segments. So therefore, it's very difficult to pinpoint one. But Australia would be a big one, and of course, the United States, for example. Also, China is a big market. Basically, the biggest countries in the world are among their biggest customers as well.
Thank you. If you look at the shareholders' structure, how advantages or disadvantages is it to have a pension fund, if I understood correctly, owning 74% of the company?
No, actually, the biggest shareholder is a Swedish investment fund, and then the 2 other biggest are a Swedish bank, which is 5%, and a pension fund has 4%, and 76%. The other percentage is for other shareholders. And if I may just add on your question about the shareholders, because I think it's an important question. The biggest shareholder is Investor AB, which is a long-time investor already. It's been there for a couple of decades. They have 2 places in the board. One of the board members used to work for Investor AB, so they have a strong position in this board. And that's also something which influences their long-term strategy, given the fact that this investor is in there for the long term. So that's something I would like to add.
Thanks.
Maybe looking at Compressor Techniques, which is, I think, 50% of your valuation. I think their margins are substantially higher than their key competitor, Ingersoll Rand. How comfortable are you that they can maintain that gap, and can you explain why there is a gap between those 2 companies?
I would refer back to the competitive advantage that we have already mentioned. So Atlas Copco is really focusing on creating the most value with their customers. So they really try to promote the sustainability which they can offer for their customers, and also the company's products, especially in the compressor technique industry and also in mining, are really known for their reliability. Therefore, we think that we are really confident that they will be able to maintain those high margins. Of course, there's a risk that other competitors come on the market, for example, from low-cost countries like in Asia. But given also the fact that they operate under a number of different brand names in the compressor technique business segment, we are confident that they will be able to maintain those margins.
If I may add on that, especially for the compressor technique business segment where you're referring to, almost all costs of a compressor are actually made by the operational cost and not actually the buying the compressor itself. So therefore, it's really important that the machine actually is sustainable. And Atlas Copco, actually makes the most sustainable compressors in the world. So that's where their main competitive advantage in the compressor technique business segment lies.
You talked about some of the advantages that they have with regard to their R&D spending versus the competitors. Why don't their competitors copy them?
The competitors just have a different strategy. They don't operate asset light. They just, for example, Sandvik doesn't have the same fixed asset turnover like Atlas Copco has.
Is it more on the R&D being a distinguishing factor that they spend less directly on R&D but benefit to the same amount as their peers with regard to their spend? Why don't others copy them?
Well, if I may add on that, actually Atlas Copco targets the R&D on the core components. For instance, for the mining equipment, it's a huge vehicle, and they only use R&D on the drill in front of it. The rest they buy, and therefore they actually leverage on the R&D of their competitors, of their suppliers. So the suppliers, they develop the engine, they develop the tires, they develop the chassis, and that's already quite highly developed. And then Atlas Copco, they focus on their core component, on their core competence, which is the drill. And they put their R&D on the drill so that the drill actually is the distinguishing factor about this whole machine.
Yeah, and if I then just may add on that, it's, for example, few of the competitors of Atlas Copco supply also some of the parts that are used by Atlas Copco. So therefore, they can't really copy that easily because they already supply to Atlas Copco.
Mining is their second largest line of business. You mentioned improving commodity prices. How sensitive is your evaluation to improving commodity prices, and what's your insight on commodity prices?
That is a really good question, actually. Pardon me. But yeah, so as everyone should know that the commodity prices are now really depressed at this point in time. And so with depressed commodity prices, of course, your cost of production for the entire business is definitely much lower in terms of lower commodity prices. So this acts like a natural hedge in some in a particular situation like this, because in the mining rock excavation business of ADCO, because of low commodity prices, it takes a hit on that business segment. But because of low commodity prices at the same time, the cost of production of the entire business goes down. So that acts like a natural hedge to offset an increase in cost of production in your, decrease in revenue from the mining segment, and a decrease in cost of production from your overall business. And we also actually kind of forecast that the commodity prices is anticipated to rise by 2016. So if you realize, the natural hedge always works in any situation.
So, picking on this point, you're expecting the mining business to reverse in terms of growth?
No, not really. So we expect the mining business to remain stable, but not negative as it was in the last 4 years.
Yeah.
So definitely there will be some improvement, but it won't be it won't grow as fast as, for example, especially the construction technique and the industrial technique business segments.
And you're expecting this because you're expecting commodity prices to recover?
Yes.
The World Bank actually has published its expectations about the commodity prices, and actually they expect the commodity price to remain at this level in 2015, but in 2016 actually expect it to go up again. And in addition to that, as you can see in the figures, ADCO actually has a really high percentage of its revenues in the mining segment coming from its service activities. So these service activities are way less impacted by the commodity prices, as you will always need service to maintain your existing machines. And if you're not going to buy the machines, they are actually more intended to rent them, and that's actually one of the things which they do in their service.
Can you go to the slide of the Monte Carlo simulation? So, what exactly is the upside potential of 61%?
So we have a current share price of 282 as today. Our target share price, fair share price, we calculate is 291. And from the target price, 291, we actually have a chance of an increasing price of 61%. You can see that from this point here, which is the target price, we have a higher chance of an increasing price, even though it's moderately higher than of a decreasing price. And we use the yellow is our recommendation range from the current price is 15% up, 15% down. That's the whole area.
Maybe strategically, if you look at, let's say, the construction equipment business, I think some of their competitors are looking to potentially even sell that off because it's less profitable than the rest. What's the strategy at Atlas Copco?
The strategy to whether did I get the question right, that you're asking that Atlas Copco might sell it off, might sell the construction technique business?
Some of their competitors are actually looking into that because it's a lower margin business. What's the view of Atlas Copco, and would it be a wise thing to sell or wiser to keep?
Atlas Copco is actually not looking into selling this business. We can actually see that in our valuation, the construction technique business segment has a higher portion of the total share price than its current revenue share. This means that we also anticipate, and ADCO as well, a higher growth forecast than the other business segments. So it would certainly not be a good idea to sell it at this point of time.
You spoke a bit about the different dynamics between in the the after sales market. Can you talk about how cyclical that market is and if there is a different dynamic overall? Sorry, and also increased competition. Oh, sorry.